So they spent more money on marketing than they got in revenue. All right, welcome to Talking Investing. I am Tom. This is not financial advice. We're here to talk about all things investing. And today I want to talk to you about a company called Skillz, stock ticker SKLZ. So I'll try to make it quick. I want to accomplish a few things in this video. I want to talk about their Q2 earnings, talk about some of the information that came out of that, a few strategic partnerships that they've entered into, and a few key acquisitions that they've made that I think are going to help this business grow dramatically. I did do a video on this about 3 weeks ago for more of a short-term trade, so you guys can watch that one if you want to. However, after having done a lot more due diligence, I have a much higher level of conviction in this company. I think this company has one or two issues to get through, and if they get through them, and I think they will, then they are going to go to the moon. So let's just start out by taking a quick look at the Q2 results. Okay, this is August 3rd, 2021, and today is August 25th, 2021, getting near the end of the trading day. So Skillz reports record Q2 revenue and updates 2021 guidance. So I'm just going to read a few items from this that are key. Q2 financial highlights. Revenue grew to $89.5 million during the second quarter of 2021, up 52% over the prior year. Gross profit grew to $85.1 million during the second quarter of 2021, also up 52% over the prior year. So here's the most important thing in my opinion that they say. Gross margin was 95% during the second quarter of 2021, and that was in line with the prior year. This is a business model that is generating a 95% gross profit, which is absolutely incredible. Like I said, they do have a few issues to work out on the cost side of things, but from a big picture standpoint, they are a high growth company and they are a 95% gross profit company. I think very good things are ahead. Skillz is a gaming company, and in addition to that, it's actually, I think, considered in the gambling arena as well. So it's a combination of two things that are very high growth right now. They provide a platform for developers to put their apps on and integrate into and create revenue, while they provide a platform for players to come onto the game and either choose to play for free, or they can enter tournaments for a fee and cash prizes are given out. So I'll just throw a few numbers at you real quickly. They have 30 plus million players right now. They have 30 plus thousand game developers right now, over 5 million daily tournaments, and over $100 million in monthly prizes. So they have 5 million tournaments going on a day. They have over 30 million players. And also the key one, they have over 30,000 game developers. So they don't have to develop all these games themselves. Their platform is actually the technology to integrate an existing application and increase its capabilities to generate revenue. As a function of that, they get paid a portion of that revenue. One of their issues is Google's terms of service. So I am at support.google.com, where they go through, I'm at Policy Center, restricted content, real money, gambling, games, and contests. So their apps all fall under this rule. And currently, the way this rule is structured, unless you have a gambling license, you are not allowed to put an app on an Android device because Android is owned by Google. So all of that falls under the Google terms of service. If you have an Android phone, you can use Skillz. You just have to download their app from their web page, and then you can have it on your phone and use it. But it's just not in the Google Play Store, which is a big deal. And I do believe that, I don't know what the time frame is, but I do believe Google will eventually come around and allow these apps into their store, because iPhone is already doing it, and those two obviously are major competition for each other. So I am speculating. I don't know if or when that's going to happen. I don't have a crystal ball, but it makes sense to me that Google has already loosened the terms a little bit. I think that will trend in that direction. And when that happens, that opens the door to a lot more potential new users for Skillz. Now I want to go through two key partnerships that they have entered into this year that I think are going to provide a massive increase in their users and their revenue. The first one is they added the game Big Buck Hunter Marksman. Many of you may be familiar with this game. It's actually an arcade game. It's over 20 years old. So this has been around for a long time. It has massive brand recognition, and they have added this to the Skillz family. This is their first-person shooter game that they have on their platform. So they're entering an entire new arena, and as you know, the first-person shooter games are among the most widely played games. So this is opening yet another very big door. Next, they formed a partnership with the NFL. Doesn't really get any bigger than that. They created a challenge to come up with a new NFL game to put on the Skillz system. Now I want to talk about two acquisitions that they made during this quarter that are also pivotal. So in this quarter, they bought a company called Arky. Basically, Arky is an online advertising and marketing platform. So rather than pay to use them, they actually bought this company. User acquisition cost is a giant problem for this company right now, one that I believe they will solve, and this is one of the ways that they're going to solve it. The other company is a company called Exit Games. Here they say, yesterday we announced a $50 million strategic investment in Exit Games. This deal gives us exclusive partnership rights and perpetual access to the world's most advanced multiplayer servers and accelerates our timeline to support new game genres such as Battle Royale. They said they had over 5 million tournaments a day, so this enhances their core technology. They will integrate this with what they have, and they will be able to continue to scale up. So those are two acquisitions that they made, both of which I think fundamentally enhance the company. Now let's take a quick look at the numbers. Okay, this is their consolidated statement of operations, or their income statement, from their Q2 filing to the SEC. So I want to focus on just a few numbers. I'm going to be focusing on this column right here. That is their current quarter results. So revenue, $89 million. So on the revenue side and the growth side, they're doing well. That's a great increase in revenue. So you'll see they have total cost and expenses of $139 million. Well, unfortunately, that's about $50 million more than they had in revenue. So this company lost money this quarter. However, it's really all in one number that jumps out, $99.5 million. Now, they only had $89.5 million in revenue. So they spent more money on marketing than they got in revenue. Obviously, a company like this, it's all about users. They said they have 30 million users right now. You know, if that were to turn into 100 million and then 300 million, etc., this scales up dramatically. So that is their mission. They need to add new users. Like we talked about, they made an acquisition of a marketing company so that could help reduce their cost per new user. So that should help reduce this number proportionate to revenue over time. In addition to that, they have also spent about half of that money on rewards and bonuses to retain existing users. So within the games, they've given out a lot of extra prizes over the last quarter to help incentivize retention of their existing customers. To me, that number is too high. I think that they need to wean themselves off of that over time. First of all, people can play for free. So nobody needs a bonus incentive to play for free. So those that are paying customers, they need to get to an equation where the money that they win makes it worth their while to continue to play, and they don't need all these extra incentives and bonuses. That's my number one concern with this company. So having said that, let's take a look at the chart. Okay, I'm zoomed way in here to the May, June, July, August stock chart. Here on August 3rd, they announced earnings, and as you can see, from that day, they took a giant hit down to the bottom of what had been their trading range that they kind of tested here and here. So they got down there, went sideways a little bit, and I was hoping they would stay inside of that range. However, you can see they broke to the downside. So that was a disturbing short-term trend. However, I'm going to zoom in a little further. You'll see right here on about August 19th, they bottomed out just at around $10. Since then, they have been heading up. So today, they're at $10.89 as we speak. They've been hanging out at about $11. I am expecting them to get back inside of their normal trading range, which I had established these two purple lines a while back, between around $12 on the low side and $22 on the high side. You'll see starting back here in early June a very big downward trend. And that was not as much stock specific as it was. This is a small cap growth stock, and most of you retail investors, probably this isn't the only one in your portfolio, so you know that the small cap growth stocks got wrecked in that time period. So this one was dragged down right along with it. So a lot of this downward pressure was just overall market pressure on the small caps, where the market had rotated out. I believe, and I think you're seeing this in a lot of other small cap growth companies, I think we're starting the rotation back into that. So don't know how long that's going to take. I think we've had a couple of head fakes already, but I believe we're rotating back into these small cap growth stocks. If they can break back above this $12 mark, I think they'll start trading more naturally inside of that $12 to $22 price range. And you will see that that is nowhere near their 2021 high. On February 5th, they were up at this yellow line, which was at $46. So this was a $46 stock this year. I don't think it's getting back to $46 this year. For starters, I'm looking for them to get back into their trading range. On a long-term basis, I do think if they can solve their user acquisition cost, they could possibly have a $100 million bottom line. So you can see if they can get to a $300 million bottom line, that would be $1 per share, and just on a 30 multiple, which is very low for a growth stock, that would put this stock at $30. So I think there's every chance in the next 24 to 36 months for this thing to break its all-time high of $46 that it hit in February and move into the $50 range and maybe points even beyond that. So again, I'm not a financial analyst. I can't tell you guys what to do. I'm calling this a buy and hold. So I will be buying shares of this. I think this is a great entry point. I'm going to be buying shares and I'm going to be holding them probably for years unless part of their story changes fundamentally. So those are my thoughts on Skillz. Thank you so much for watching the video, and we will see you in the next one.